All right, guys, Sam back with you here. We're midday on a Wednesday, February 21st. And I had some members asking about Enigma. This is a favorite project. Very strong fundamentals. They had all of the ingredients for a good trade were here. So I wanted to show you this for a couple of reasons. One, I want to be sure that people don't think that I just cherry pick or only show you things that where there's no trade or a trade coming. So this is the last trade that we had in here. So I want you to understand this. So number one, I get stopped out all the time, right? I mean, if you're trading, you're getting stopped out a lot. You have to accept that. It can't be a big deal. It's trying to be perfect in your trading. It's a goal that's unachievable. It's unattainable. I'm very quick to pull the trigger. But the reason I'm quick to pull the trigger is one. Granted, I've been doing this for a long time, but I can look at this and say, okay, the level of risk here is so small relative to the potential reward there. That was an 18.6 to 1. I mean, that's no hesitation to take that. It gets stopped out. I mean, I get stopped out way more often than I don't. Way more. That's just the reality of trading. So, it's trying to get the perfect trade. You've got it on the 4 hour, and then you're down to the 1 hour, and you've gone all the way down to the 15. Now you're looking at the 5 minute. That's too much. You don't need to do that. Set the trade up. Have a clear point where you know that you're wrong. Look at the risk reward. Is the reward enough to warrant the amount of risk that you're putting into the market? And pull the trigger. It's just not. Again, I see this all the time. It's like trying to write and edit at the same time. People that write will tell you that good writing is good editing. First, you just got to get it down. So first, you analyze the chart. Where's the opportunity? Don't overanalyze it. Do you have a count that makes sense? Is it clear? Can you set up good risk reward? If you can, pull the trigger. It's as simple as that. If you get stopped out, next trade. You're going to get stopped out all the time. So anyway, not to get off on a rant. So let's take that off. So here you can see, all of the ingredients were here for that trade. So we had a nice clean 5-wave sequence here. Kind of a skinny B wave here, but it came down. We held the pivot here. Looked like we had the potential for that to be a 2-wave. If that's the 2-wave, well, the third is way up here. I mean, I would take that trade 100 out of 100 times. No hesitation. Knowing I'm going to get stopped out way more than I don't. It doesn't take many of those to hit. Even if you got half of that target, you've done extremely well, and you've compensated yourself for all those little losers that you had along the way. That's just the name of the game in trading. It's not taking the big loser. I mean, it's easy to say. I get that, right? I've been there. I've moved the stop. I've rationalized. I've made all those mistakes. Put the trade on, place the stop, just let it be. If there's trade management along the way, that's another subject. So if you get a good reaction, it makes sense to reduce the risk. If it's following your potential roadmap or Elliott count or however you want to think of it, there are reasonable places for you to take partials or maybe add to it. But it's this idea that you have to set it up perfectly that I think keeps a lot of people from taking good trades. Anyway, so this is all wrong. So everything here that we laid out, wrong. Okay, so what could it be? So I'm just going to clear this up here. So all of this ends up being wrong. What is still in play? So we don't need this, but this still potentially here, we have something happening here. I can take this off. I did all the subdivision on this. Potentially there's a 2 down here somewhere. Just not where we initially thought we had it. So if we look now here, we can make a case for this being a 1, 2, 3, 4. You get a 5-wave here. Maybe you get a truncated bottom here. It's not the prettiest. So it looks like you get a 5-wave here, and then this little funky little wick here gives you the 3rd wave. So you get a B. Now look where we are here. Now, so we got to come all the way over here. So what are we doing? We're just dabbing into the golden zone. Dab. So here's the reaction. It's 3. Do you see that? So so if you took this, right? So this was a very reasonable trade to take right here, right? We had an A, B, C. We're into the golden zone. Man, again, there's another trade. 100 out of 100 times. You got to take that. You got to take that. Doesn't work out. So you're right back to where you started. Does that mean the trade's invalid? Well, look what's happening here. Now, so why is that happening? Right? Because algorithms are written to buy it there. They start by, here's the reaction at the 50. All right, here you had a little reaction at the 50. Reaction, can't get there. They will continue to support and buy it to the other side of the 65. Then they're going to flip. That doesn't mean that they sell here. That means that then they just reposition to take the next 50 coming back up. All right, so what can we learn from this? Well, this is, so again, you just start with the basics. Okay, well, here's the B, here's the first move down. All right, so we're a little hot here. So that would have implied strength. That would have been a good sign. If I go all the way back, here's the 50. So it's just a process of deductive reasoning. Okay, if this is the A, B, C, I got a 3-wave here. That would have been beautifully set up as a 1, 2, 3. Potentially here's the 4. We're looking for a diagonal. It rolls over. Doesn't happen. For whatever reason, it doesn't happen. Okay, so so this, now that we've got a double bottom, does that make sense? Well, we know the 2 could be as deep as the 786. I mean, it can go deeper than that, but these are the probability zones. So I can look at this and go, okay, well, swing high to swing low, right to the 50. Where's that target? It's right down here. Did they get there? Not necessarily, but we look here. Now, if we dig in here, right, you see how we get this 3-wave. So this implies correction. Remember, we trend in 5s, we correct in 3s. So let's pull out again. Do we have potentially a WXY? So this would have to be the X wave. Maybe a little soon for that. There has been quite a bit of that. So what would that look like? We'd have to play it like this. So again, WXY connecting to ABC. So this would be a completed ABC, which you could certainly make that case. Here would be your corrective wave, and then we'd be going down into another ABC. So is this ABC? Potentially. You could make that case. I mean, it's very reasonable to be a buyer here. It's, the length of the first ABC relative to the second, a little suspect, but you could be buying this. You could say, God, that Elliott wave is just garbage. I don't buy it. I don't get it. I don't want to trade it. I don't want to spend the time. Okay, no problem. You're just trading swing low to swing high. You're right at the golden zone. Why would you not buy that? You buy it for the same reason you bought it here. Okay, so you didn't get to new highs. So I might kind of look at this and go, that's where I did expect that reaction, but I don't know that I don't love it enough here. Let's go down to the 1 hour. I mean, there's a way I could like that even better. So what do I not like? I don't like the length of time between the two potential the ABCs. So we clearly, okay, we can see now that can we dig in here and make some sense of it? So this sure looks like a 1-wave, very clear ABC into a 2-wave. That's not likely to be the 3. So this could well be the 3. So we do it like this. Potentially the 4 going in, maybe the 5's down here. Let's get this C out of the picture because we can't confirm that yet. So how do we know? How do we know what we've got? Well, first thing, we just start measuring. Okay, so let's take the alternate price projection tool. So let's look. Do we have a relationship that would imply that that's a third? So if I take the length of the 1 projected from the 2, well, here's my high probability zone here. So we don't quite get there. Maybe that's implying strength. So I get this here. So here's the window here where you'd expect the 3. We come a little shy of it, and we've looked at why that is, because there's algorithms that are written to buy the 618 there, right? So right in the golden zone. So can I make sense of that? So how would I know if I want to be more confident in what I'm seeing? Well, if that's a 2 to my 3, then I'm looking for high probability zones here. Now let me pull some of this off because I know this gets hard to see. So if I get that off. So we've established the goal that we're down here double bottoming in the golden zone. So we know that's there. Possibly the W, possibly the X. But I can get a 1, 2, 3 potentially here. So what am I looking for here? Do I go impulsive? Okay, so let's get our arrow to. If we're going to come here. If we're going to come up here and put in a 4 and then turn over again. Right, what's the reaction here? Are we coming back down to give us a 5-wave structure here? right? Or do we have an A, B, and now we're getting, we're trying to carve out 5 waves in here. This is awfully shallow, but I suppose you could make that case that if we're trying to work the WXY, we're looking for an ABC. So you could potentially play it this way. So you could have here, come on, we could have an A, B going down into a C here. Know that we need the wave on that. Let's take that up. So now pulling out. Come here. Does that make sense? W, X, A, B, C. I want to see 5 waves in my C wave. Maybe. How do we know? How do we know? What happens here? What happens at the high probability zone coming back up? Can we get through the 38 and the 50, which would be the highest probability zone for the 4? Can we get through that? Or do we roll over? If we start to roll over, well, then the anticipation, that doesn't mean you couldn't trade it here, right? Because we know we're sitting right in the golden zone. You could take the trade here because algorithms are trading it. And the priority is always what are the algos doing? We're just using the Elliott wave to try and get in behind them. So you could certainly be a buyer here, but you know where you're likely to hit some resistance because the count is unclear. So is there enough there? Well, that's your call as to whether or not that's enough potential reward. Now, if it starts to rally off of that and we get through some of this, eventually there's going to be a pullback, right? Because it's the people that bought here, whether it's algos or not, the people that bought here are going to be tempted to take some profit. That's what will typically create the second. Right? Or you hit some structural resistance up here, it starts to roll over. Then do we get a higher low? Right? That's how you know. So you could think of it as A, B, C. Are we going to come up here? Are we going to put in a higher low? Right? Which would imply that now that would be the 2. Now we're going up for the 3. Can we challenge the 618 here? Can we get, if this is going to be our low, right? So we've made the case. We know we're sitting in the golden zone. You could probably carve a 1, 2. It ain't gorgeous, but you could probably get a 5 wave out of that. So you've got a potential candidate here, not because of the Elliott count, but because of the algo pull, because of the 618 here and the double bottom, that potential. So what happens here? Do we get a higher low? Then do we start to move away? Well, then you tighten up your stop. Then you essentially you'd have something close to a free trade or very reduced risk. Or do we roll over and head back down? So look here. So from this swing low, swing high to swing low, here's where there's going to be another group of algorithms that are going to sell that 618. They're going to sell the 50. They're going to defend the 618. Here's their target. Now we break that. If we break this low here, which we know was sitting right at the 618, well, now we got a new game on our hands, right? Algos are going to flip on that. So then what? It's the same thing. We'd have to see this again. We'd have to see a higher low eventually to get bullish. We'd have to see some reaction. Then we'd have to see this come down, test the low. The lows almost always, not always, but majority of the time, there's going to be a test that creates the 2, that creates the higher low to imply the new trend. Do we get this? So the safest way to trade it is always wait for the test of the low. That's the 2 or the B. What's the reaction? Right? See, but you can trade this because look at the risk from pivot here. Right? That's why you want to try and make that trade. Because you can enter here knowing you're wrong. If the pivot is taken out, you're wrong. And now you have a lower low. Right? You're wrong. Right? Stopped out. Again, right where we started. Get used to it. Doesn't mean you don't take the trade. Doesn't mean you wait for perfect. Just look for the probability zones. Right? Does that work? Can you make that fit your risk reward profile? Right? Maybe that's a function of how much size you put on there. If you're stopped out, what kind of damage is that going to do? Maybe that influences how much size you put on. And if it starts to go, well, then you tighten up the stop and there you go. Right? But expect, the first question is, well, the odds are I'm going to get stopped out. If you just think of it that way, odds are you're almost always going to get stopped out more times than you're not. So assuming I'm going to get stopped out, how much can I risk there? Right? The odds are you will get stopped out. That doesn't mean don't take the trade. I'm not trying to be negative about how you approach the market. It's quite the contrary. It's just not to be afraid of it. You have to respect the market, right? As I often will tell you, the markets take aggressively. They give reluctantly. So you have to play the odds. So the mistake is to move your stop because, oh no, I'm sure I'm right. I'm sure it's going up. I'm sure it's going up. That's when you get hurt. That's so. See, the problem with that, you know, if you move the stop, oh, I'm sure. Well, there's two problems. One, if it does come back and you get out of trouble, you reinforce the bad habit, right? So that's probably the worst case scenario, because then you'll do it again the next time because you got out of trouble. You know, you just, and it's that you're rationalizing your trade, like, because one of these times it doesn't come back. And now you've taken a much bigger loss, and now the number of times that you have to be right goes up. So now you've doubled the odds against you, right? So now you have to be right more than you're wrong, or at least at a higher percentage. So what happens now you're nervous. Now you're nervous to take the trade because you made a mistake, and markets punish mistakes. You took the big loser here. Well, now I got to be perfect on this next one. So the next time that it sets up, you'll be nervous. You'll be trying to be perfect. You won't pull the trigger, and guarantee you that's the one that goes. It's just how the market is. It's kind of a perversion to it. So the simple answer is don't move your stop. Just take the stop. It's just part of it. You got to get comfortable with that, right? It doesn't take many times for you to get the roadmap, right? For you to leverage it all the way, because if we get that, then we're looking for this, then we're looking for this, right? Re-entry, right? Now you got a 5 wave, right? That's what you're trying to do. All right, guys, I ran a little long there. Okay, that should give you plenty to chew on with regard to Enigma. This is a great project. It's one of my long-term holds. You know, but I'm not in it. So there's different ways to think about that. So, you know, I like this project fundamentally long-term. I'm not trying to swing trade it. I just park some Bitcoin there because I like the project long-term. If you're trying to swing trade it, that's a different conversation. Right, so just, you know, I'm not trying to pump my bag. I'm just trying to show you how to approach swing trading this. You don't care about any of this, so buy and hold it. You know, that's the beauty of it. You can approach this however you want. Want to be a swing trader? There's some things to think about. All right, guys, I'll wrap.